you wanted the best, you've got the best podcast, the hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
Hi, folks. It's Voss here from thechrisvossshow.com. There you go, ladies and gentlemen. The earliest things that makes it official. Welcome to the big show. We certainly appreciate you guys being here. As always, the Chris Voss Show is the family that loves you but doesn't judge you. At least not as harsh as your dad that time you took apart his watch and then you couldn't put it back together again. That actually, me and my brother did that. And then he hated you for the rest of your life, which is, what you shouldn't do. Don't take apart your dad's watch, damn it, especially his favorite watch, because you never really put it back together. And we just thought it was so cool. We were just showing him how cool we were, how smart we gotten, and he did not appreciate it. But you can enter your dad's good site. Tell him to go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss. Chris Voss one on the TikTok, and all those crazy places on the internet. We have an amazing young man on the show, and he's going to be talking to us about a whole plethora of amazing stuff, from growing companies, fund managing, marketing, products, and strategy, business developments, blockchain, alternative assets, and tech startups. David Doss joins us on the show today. He's an MBA, and I believe he's also the founder of CKC Fund. So we'll be talking about his insights there and what he does. He has over 15 years in marketing, growth, and investment. He's led teams and managed 7-figure budgets in the digital economy and alternative assets. He holds a summa cum laude BA from UC Berkeley and an MA as a Fulbright Scholar and an MBA in strategy and innovation. His expertise spans nonprofits, startups, and digital transformation for major entities like Saks Fifth Avenue and Citi. With 7 years in blockchain, he chairs CKC Studio Blockchain Growth Studio and manages CKC Fund, Digital Asset Fund Manager, and he also serves on Chain BLX's board, overseeing corporate events and managing Cayman-based alternative asset funds. David Doss, welcome to the show. How are you?
Thanks for having me on the show, Chris. Yeah. Well,
Thanks
after
for coming.
that intro, I'm super amped. Got the hard rock, got the
There you go.
intro, so yeah, ready to
People
go.
People tell me that I should walk around and just introduce them anytime they enter a room.
Yeah, sign me up.
Hear ye. Entering the room is the... David, give us a .coms or what, whatever's where you want people to find you on the interwebs.
Yeah, so let's see. I'm quite active on LinkedIn, so you can find me there. LinkedIn.com. Just my David Ambrose Doss is my URL handle. I put out a lot of educational content, post a lot on there. You can also shoot me an email at david@ckc.fund. I would be happy to talk with you there. Also, our team puts out a newsletter on LinkedIn as well as over email. So if you'd like to, you're welcome to subscribe on LinkedIn or shoot us an email and we can add you in on the email version.
There you go. So, David, give us a 30,000 overview of what you guys do there at CKC Fund.
Yeah, so we are providing blockchain services overall in two main areas. Mm-hmm. One is digital asset fund management, and then the other is basically blockchain program management. So on the asset management side, we run strategies for fund vehicles for investors, where we focus on basically de-risking digital asset investment and maximizing the upside. So less downside, more upside is kind of the name of the game there. And then on the blockchain program management side, we work with businesses and high net worth individuals as well to provide tailor-made solutions that solve some of their blockchain, cryptocurrency, and digital asset needs.
There you go. Tell us about how you grew up. What got you into managing on your fund, being interested in this field, et cetera, et cetera?
Yeah, I mean, for one thing, I'm a watch kind of your intro, so I like I like alternative investments, like, watches. I grew up even, collecting baseball cards, or actually, to be completely honest, it was a lot nerdier than that. I was collecting like trading cards, Yu-Gi-Oh, Lord of the Rings trading cards, different stuff like that. But that kind of card collection, really interested in alternative investments in general. Also, kind of short sidebar, but I was kind of chuckling when you were talking about your watch story, because I gave my 8-year-old nephew a watch for his birthday, and he broke it within literally 10 minutes of me gifting it to him. But, hopefully he had fun for that first 10. But anyway, on my background, I grew up in the Silicon Valley area, kind of against the backdrop of the tech boom and bust, and also the real estate boom and bust. So really interested in innovation, technology, alternative investments. And from there, I went to live, work, study in different parts of the world, and then spent a chunk of time working in Silicon Valley on digital economy, also in New York City on startups and digital transformation. And that really got me interested in the tech and innovation space, and specifically in the blockchain space, because of the alternative solutions it has for basically helping people and businesses to grow, to build wealth, that sort of thing.
There you go. So what was it that made cryptocurrency, blockchain, and things like that really draw your attention as opposed to normal vehicles of investments?
Yeah, it's kind of a lot of things in my background that I think made me interested in that. But for one thing, I was researching in grad school basically how bottom-up social movements around the world can impact change globally. And that to me is decentralization, essentially, that those structures where private sector, small groups can really catalyze change. And then beyond that, just being very involved globally in different countries. I mean, for one thing, teaching in, let's say, Indonesia for one, where at the time the Indonesian rupiah was 7,000 rupiah to $1, and it's inflated since then to I believe below 10,000 last time I checked. So seeing the effect of more centralized monetary policies, how some of those can negatively impact, hundreds of millions of people around the world, but also working in more kind of traditional systems like Citibank, where the level of kind of bureaucracy and red tape involved in sending money state to state within the United States, let alone sending money internationally, is also something that really struck me working there at the time. And then lastly, just seeing the power of investing into alternative assets in general, where, I've seen a lot of people growing up and in my career as well, where they've been really kind of disillusioned with the kind of same old plain vanilla stocks and bonds, where their money, I think a lot of people feel, and a lot of businesses as well, feel like their money is not necessarily working as hard for them as they worked to get it, basically. And so wanting to provide people with hardworking investments is the crux of it.
Now, tell me about this Cayman Island segment of what you guys do, and is it a different company, or is it part of the whole umbrella of what you're doing, or how does that work?
Yeah, we are a largely US-based team, but we work with investment groups and investment vehicles in different jurisdictions. One of them is in Cayman. So with that in mind, I mean, we as a US team will manage, say, collective capital in a vehicle in Cayman, for example. So then there's kind of a question of the fund manager versus the vehicles that they're managing. So basically, fund manager is US, vehicles can be in different places, including Cayman.
There you go. So why is it good to invest in vehicles in the Cayman Islands as opposed to locally here?
It can really depend on a person's situation. I mean, this is not investment tax or legal advice. Be sure to do your own research. But some of the advantages can be, for example, that Cayman funds are very global in focus. That allows for us to work with people from from around the world, different continents and countries. Another is that specifically as regards, say, a place like the U.S., all things being equal, there's not a lot of, or I would say, in my opinion, not sufficient regulatory framework yet for the digital asset space. Mm-hmm. And also there's a lot of clarities in terms of regulation of private fund vehicles. Mm-hmm. In contrast, in a place like, they'll require mandatory third-party audits, they'll require digital asset regulation, they have restrictions on, basically restrictions in place to keep the kinds of things from happening that a lot of people hear about in the news, the horror stories and stuff like that, right?
Yeah.
So that's where, even though I think sometimes when people think Cayman, they think of a kind of a bad 1980s action movie or something like that. And the reality of it is Scarface. The reality of it is that nowadays with private funds, with digital asset regulation, they've really been leading the way globally in a lot of ways.
Huh. There you go. Good for that. Do you work in a lot of the spectrum of cyber, or do you focus on just the main cyber funds? Why is it escaping right? Crypto funds, or do you mainly focus on the main ones, or can you just buy and sell everything?
Yeah, so that's a good question. I guess fun trivia question for you. How many cryptocurrencies do you think are out there?
Boy, I don't know. There used to be just a small amount. There's like 1 billion now or something. I don't know.
Yeah.
There's Bitcoin is the main one, right? Everyone knows
Bitcoin is the main one, right? But then beyond that, there's around 25,000 different cryptocurrencies.
25,000?
Yeah. So that's, it's quite a bit. But, and then that's not even counting tokenized real world assets. It's not counting NFTs, stuff like that. So the total kind of addressable universe there is probably even much higher than that. But so to that point, what we largely do is focus on the top 1,000. So kind of similar to how, if you were say putting money into stocks, right? You would probably, on the one hand, you wouldn't usually put all your eggs into some new thing that was right about to IPO. Sort of, you wouldn't kind of bet the farm on it. On the other hand, most people, some people have, and have done that, and it's really not worked for them. But, I'd say most people would agree that they wouldn't, just put all their eggs in one basket, whether it's the number one stock, by market cap, or whether it's the stock that's about to IPO or what have you. Somewhat similar concept is what we do in the digital asset space, where basically we build out research diversified portfolios as a management team, where we're basically allocating across different use cases. Like in the stock market, you have healthcare, financial services, industrials, tech. Same or similar idea with what we're doing, where you have use cases like smart contract platforms, decentralized file storage, currencies, that sort of stuff. And then also dividing by, market cap, high cap, mid cap, low cap, these sorts of things. And then actively adjusting the balance of the portfolio as the market conditions shift. And that's the functional idea of a lot of what we do.
Wow. That's a lot of stuff to track. So, you guys probably have a lot of good systems. Of course, there's AI now, and a lot of good computer stuff you can do. It's got to be quite the job to track all that stuff.
Yeah, it's one of those things where any one part of it is not necessarily rocket science per se, but everything everywhere all at once is a lot to handle. Where the analogy I'll use is, say, it's like the difference between playing tennis for fun and playing tennis professionally. Anyone can pick up a racket and start swinging, and anyone could, in theory, buy or sell cryptocurrencies or other assets, right? There are some barriers to entry, but not all that many. The point, though, is that the devil is in the details, where just one of my favorite sayings is, if it's common sense, make it common practice of doing things day in and day out when you're tired, when you're busy, when you have something more interesting to do, that sort of thing is really the proving ground of, kind of the little decisions every day over time.
There you go. Do you? I mean, I know Bitcoin's been making a comeback. I haven't checked it in recent weeks, so I might be off by then. But I know it dipped down pretty heavily, and then it started to make a really good comeback and stuff. What's sort of future? I mean, I don't want to put you in a position where you're predicting anything here, but what are you bullish on the future of coin and different crypto assets and where they're headed?
I definitely am. So there's a couple of main things to say there. One of them is just overall that the crypto market operates in roughly 4-year market cycles. So we're in roughly the kind of similar environment to how we were in, say, summer of 2020, plus or minus. There's a saying, history doesn't always repeat itself, but it usually rhymes. And it's not like down to the hour and the minute and stuff, but broadly 4-year cycles. And so thinking through that, this is something that we've seen happen over a couple of different 4-year periods. Basically, there's a long bear market or kind of a downturn, and then there's kind of a slow build up, and then things kind of really explode kind of exponentially over the course of about anywhere between 6 to 18 months. And so all things being equal, I believe, and a lot of experts in the space believe that we're close to the beginning than the end of that huge run-up phase, basically, of this next cycle around, where a lot of this happens kind of right after the halving. It's the kind of technical part of things that happen with Bitcoin. But basically, we just had that happen, and there's kind of this anticipation in the markets for the next thing. Another important thing to be considering is the approval of the Bitcoin ETF, of the Ethereum ETF, these sorts of things that basically will bring more liquidity into the markets. That'll drive more demand. So as there's more demand, it's very likely the price will start to increase. With that in mind, that's also part of why we're doing what we're doing, where if you look at markets like gold or precious metals in general, when gold, which is the number one precious metal, when that got its ETF, its pricing kind of got a little boxed in, where yes, there's been upside with gold, but it's been kind of more minimal than it was pre-ETF. And what a lot of smart money started doing was basically moving into some of the other precious metals and into kind of more active trading strategies around those metals. Somewhat similar to what we're doing, where, with Bitcoin being the number one with the ETF, basically what we're looking to provide is that active management of all the other currencies, essentially, where it can basically provide more upside and with less risk.
Yeah. There you go. So it's going to be interesting to see how it goes. Do you find that more and more people, as they kind of hear about crypto and blockchain and stuff, more investors are coming around to it? It's just kind of a thing of exposure?
Yeah, I do think it's a question of exposure and kind of familiarizing with what's going on. A couple of relevant things, just thinking through the stats of it all, is that there are far more investors out there asking their money managers for solutions around crypto. There are far more of those folks than there are the money managers that are actually providing those solutions. So point being, while this is still, somewhat, it's an alternative investment that's, going to be, in many cases, a small allocation of most people's portfolios. That being said, it's also an investment where far more people are interested in getting some sort of professional services around it than there are those services available, which means, there is definitely demand. The other consideration to be thinking through is just kind of where we are in the adoption curve. That, I don't think that crypto has hit what some people will call kind of the iPhone moment or the ChatGPT moment or that sort of thing, where different technologies and assets have different rates, different speeds of adoption, right? But people were talking about AI for a whole long while before the kind of chat interface for AI kind of became so viral, essentially. And I think there's a decent argument to be made that we haven't necessarily yet hit that kind of virality moment truly with the digital asset space. So those are I think important things to consider.
Yeah, there you go. More people know about it. AI is going to change a lot. And Apple just announced some AI stuff. I didn't follow it because I use Androids. And my understanding is most of the AI that they announced are already in Androids, which is par for the course.
Well, fair.
What have we talked about that you guys do at your fund that we want to tease out to people?
Kind of another related answer to a question you asked before. Surveys of high net worth individuals, modern portfolio theory analysis from Forbes, ARK Invest, these sorts of places. They're all indicating that a general preference to be allocating between 2 and 10% of a portfolio into the digital asset space. So some people it's less, for others it's more, but kind of directionally speaking, that's kind of the overall preference range. And so thinking through that, I think it's important to be considering what is the role that digital assets are playing in someone's portfolio, where they're acting as a hedge against volatility in other markets. A lot of the times when stocks or bonds or real estate have been zigging, digital assets have been zagging. It's something we've seen at various points over time. So that's one consideration. The other role is basically as an asset that has asymmetric upside. So what I mean by that there is in some cases higher risk to investing in digital assets than to investing in stocks or bonds or real estate. Not always, but sometimes. That being said, the reward has historically been much higher as well. So in that sense, thinking of asymmetric upside, we talk about is, if you're putting in a certain amount of capital into an investment strategy, if it goes to zero, basically there's a floor, right? So whereas if it goes up like Bitcoin has thousands and thousands of %, there is no ceiling, right? So asymmetric upside is kind of having a floor but not having a ceiling, and that's that when properly risk mitigated, when properly managed, monitored, these sorts of things, something where controlled quantities of a portfolio being in that ceiling-less allocation can really do wonders for kind of the overall financial wellness picture of a portfolio.
There you go. Do people who invest with you need to have a minimum net worth or minimum amounts to invest?
So it depends on a lot of factors, including the country, the person's situation, these sorts of things. But in general, what we're here to do is to help educate people on the space and to help provide information that can help them to make the kinds of decisions that are going to be most beneficial for their own situations.
Mm-hmm. There you go. So give us the .coms, the .whatevers as we go out.
Yeah. So as I mentioned before, I'm very active on LinkedIn. My LinkedIn handle is David Ambrose Doss, DAVID AMBROSEDOSS. And you can also reach out to me via email, david@ckc.fund. You can also check out CKC on LinkedIn or on its website.
There you go. I always certainly appreciate you coming on the show and enlightening us, David, on all these great stuff with what's going on with crypto and what you guys are doing there at the fund.
Yeah, thanks for having me on the show, Chris. And like we were chatting about earlier, glad to have the Voss Doss duo here. So, dream team. Yeah.
There you go. Coming to a theater near you. So thanks, David, for coming on the show. Thanks, for tuning in. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss. Chris Voss, one of the TikTok and all those crazy places on the internet. Thanks for tuning in. Be good to each other. Stay safe. We'll see you next time. And that should